Jim Cramer's here answering your questions from social media. We'll start with some bank stocks. You were talking about this on CNBC earlier. Citigroup, JP Morgan, Wells Fargo, what do you like?
Look, if the Fed says they're not going to tighten, then you have to cut numbers, all of these, because the trading's been really miserable. We like Wells Fargo because it's not a trading-oriented company.
And you also like the domestic play in Wells Fargo, I know.
Well, I just think Wells Fargo's got good look. No one cares about the banks now. They need the Fed to raise rates. That's why we like Bank of America. Bank of America's got real issues, but oil went up, and a lot of their clients that people were worried about, I think, been able to refinance or at least issue equity. We have two banks because we think that one day the Fed will raise.
How about MetLife?
MetLife is a very good situation. They're very proactive in shareholders, doing some things that are excellent. I prefer Chubb just because it's so well run.
EW Scripps.
It's just okay. That media, I'm not there.
All right, somebody writes in and says, I know you like the others, but why not JetBlue?
Well, I just think that the others are trading at incredibly low multiples. I mean, American, Doug Parker's doing a great job. Southwest, to be able to get that at 8-9 times earnings is extraordinary. Delta's an amazingly well-run company. These companies, yes, they may year over year not be that good, and Wall Street doesn't know what to do with a company that year over year won't be that good. But if oil comes back down, it will be great. And I just think these stocks, they've had fabulous moves. United Continental, very, very good situation with Oscar Munoz. I don't know why they're being challenged. Drives me crazy.
On the subject of oil, listen, people have been all over the map with oil. It's been tough,
it's
but
crazy.
Somebody says, give me a couple suggestions for investing now.
Well, look, Exxon was up yesterday with oil down. Occidental's got a great yield, and I think it's very solid. Enterprise Product Partners is really the only master limited partnership that I'd be interested in right now because they have ethane. EOG eventually. But remember, long term, I don't like the fossil fuel companies because the world's going against fossil fuels. And one day they'll be like tobacco. Now, tobacco stocks are very good, but you'll start seeing institutions, I think, scale back their ownership of fossil just as a statement.
What about Allergan and this situation with the Teva acquisition, Teva?
Well, we're waiting for that. I mean, we need to see those proceeds. And then even if the Pfizer deal can't go through, then Allergan will go up a lot. Allergan is periodically lumped in with a Valiant or Horizon Pharma because they were acquisitive. But they bought Allergan. Activists bought Allergan. It's a really great company. And if they sell that generic for $40 billion, the company's in great shape whether Pfizer completes the deal or not.
Jim, you wrote about food stocks and Real Money this week. Latest thoughts on Kraft Heinz?
Kraft Heinz, very nice upgrade today by Goldman Sachs. It looks like they're finally getting serious about taking out the cost. That stock can go much higher. That's why we haven't had fraction alerts.
Jim Cramer, thanks. Send your questions to Jim on his Facebook page or on Twitter. Use #CramerQ. I'm Rhonda Shopler for The Street.